Now, as the deadline for default inches closer, questions, they keep coming in, right? What does this mean for you? Joining me now is Houston financial advisor and now candidate for Houston Mayor, Gilbert Garcia. Gilbert, thank you so much for joining us this morning.
Thank you very much for having me. It's a blast.
Okay, so let's talk about this debt ceiling. We are trying to get some answers. If passed, what would the Limit, Save, Grow Act do?
Sure. If I could take one step back, I think it's important for people to know and remember that we're the only country in the world that goes through this exercise.
Okay.
The only other country that has anything near a debt ceiling is Denmark, but it's so high it never really comes into play. So we're the only one that goes through this drama, it seems, almost every cycle. And I just want to remind everybody what a deficit means.
Okay.
What a deficit means is you're spending more money, the government, than what they're taking in. And what's become very alarming is for the first time ever, and really it started around the pandemic, we have more debt outstanding than the size of the economy as a whole. And that's typically a problem waiting to happen.
Yeah, okay, so what would this look like for Americans? Like what does it mean? Will people still get their Social Security checks?
Yeah, first of all, and I'm not trying to be political at all, I applaud that the speaker came up with something. You have to have something as a baseline to start. Whether you disagree with it, whether you agree with it, at least there's a baseline. And when you look at what he's talking about, the actual cuts are not that significant as a percentage of the overall economy. And keep in mind that the amount of spending per year is about 1.7 trillion. And all he's saying is we're going to go back to last year's levels, which is a cut of about 60 trillion. Excuse me, 60 billion. Yes. And there are a couple of things, though, that are very important to the president that he'll eliminate, like the student loan forgiveness program, like some of the monies that were allocated during COVID. He's just going to say if it's not spent, it's not going to be spent. And that's where I think really the rub goes. But we do have precedent for when there's been a, not a default, but a no agreement and the government has shut down. It happened during the Obama administration, and it happened, and it was very, very aggressive during the Clinton administration. What's very different now versus then is we're already entering these problem negotiations with already an economy that's starting to weaken significantly.
Okay, so the big question is, are we headed towards a possible recession?
I think we're headed into a recession despite this activity. This activity is going to lead us sooner and deeper into a recession. That is why tinkering with the government's ability to pay its debt is not something that should be a political item. It really should be a patriotic item to ensure we never even get there. And remember, in 2011, that's when we had all these issues related to Brexit, related to, again, the deficit, et cetera. What ended up happening? Consumer confidence plunged, the stock market's plunged, and we're already starting from a much weaker point now than we were then.
Okay, we'll definitely be keeping an eye on this. We're running out a little bit of time. Really quickly, where should people put their money?
Sure. Right now, and first of all, I happen to be a bond guy, so I happen to be partial to that. Right now, we haven't seen, for example, 6-month T-bills over 5% in a long time. We haven't seen a 2-year Treasury bond, and this is full faith and credit of the U.S. government, so there's no risk at really 4.25%. So I think the bond market is great for investors to look at what's going on in their checking accounts or saving accounts and really look into getting to short-term securities, high quality government bonds, or even munis. Munis are at very attractive levels today.
Okay. And Gilbert, I want you to tell folks about your dedication to changing the face of finance over the years of your career. And you also recently jumped into the mayor's race. So kind of put those together into one bundle.
Sure, I have. First and foremost, I had the privilege to serve on 2 FACA committees, which stands for the Federal Advisory Committee Act. And they were both with the SEC. And the second one, I was given my own lane of diversity and inclusion on how to increase diversity in financial services. Just a quick stat. If you look at all the money that's available to be managed, which is roughly, dependent upon how you look at it, 40 to 70 trillion. Minority-owned money managers or women-owned money managers manage about 1 to 1.5%.
Wow.
And that's it. And there's statistics that show they outperform their peers. And so what's going on? One of the things that's going on is we went through 2 years of expert testimony, white papers, and came up with all these efforts primarily around disclosure and transparency. Because once you shine the light on what things are, people will say, That doesn't make sense.
Right.
And as it relates to the mayor's race, look, at the my family, we've been blessed. We want to give back to the community. This is our time, and we think there are a lot of things going on in the city, and we should expect better. And that's what we're trying to do.
Gilbert, thank you so much for joining us this morning and shedding some light on this